Treasury to trading. 5 e-commerce finance shifts to watch August 7, 2026. Disclaimer: news only. Not legal, financial, medical, or official advice. Stories are informational and anecdotal. Do not treat them as advice. Story 1. Corporate Treasury and Cash Flow Management. AI-native Treasury becomes the new operating system for global e-commerce firms, the cash revolution that could make weekly forecasting obsolete. A growing theme across Treasury technology discussions is the migration from batch-era cash management toward real-time, AI-enhanced Treasury operations. Industry observers are increasingly highlighting that digital commerce companies now expect Treasury systems to function with the same speed and responsiveness as customer-facing platforms. Cash visibility, liquidity positioning, payment flows, and working capital decisions are moving toward continuous monitoring rather than scheduled review cycles. For multinational online merchants, the shift is especially important because inventory procurement, marketplace settlements, cross-border sales, and supplier payments increasingly occur around the clock. Treasury platforms are also being embedded directly into enterprise workflows through APIs, allowing operational decisions and financial decisions to occur almost simultaneously. The broader implication is that Treasury departments are increasingly becoming strategic intelligence centers instead of back-office reporting functions. Vintage futures. +1. Legal subtopic. As Treasury systems become more automated, legal teams face growing obligations surrounding record retention, auditability, algorithmic decision transparency, and governance controls. E-commerce firms deploying AI-assisted liquidity tools are expected to place greater emphasis on documenting decision logic, Treasury authority limits, and financial control frameworks. Story 2. Enterprise Risk Management, ERM. Operational resilience becomes a competitive weapon. Why tomorrow's winners may be the companies that predict failure before it happens. Enterprise risk management is undergoing a transformation as executives increasingly view resilience as a growth enabler rather than merely a compliance exercise. Current regulatory and industry discussions emphasize interconnected risks involving AI adoption, digital payments, third-party technology providers, and expanding fintech ecosystems. E-commerce companies face a unique challenge because payment processors, cloud providers, logistics platforms, and online marketplaces now form interconnected operational webs. A disruption in one critical vendor can quickly ripple across customer experiences, settlement operations, and working capital cycles. Boards are therefore demanding broader scenario analysis, real-time risk visibility, and stronger contingency planning. Modern ERM programs are increasingly integrating operational, cyber, financial, and strategic risk into unified governance structures. The trend reflects a larger shift toward viewing resilience as essential infrastructure for digital commerce growth. Citron Cooperman. Legal subtopic. Legal departments are focusing more heavily on vendor contracts, service-level agreements, data-sharing obligations, cyber liability allocations, and business continuity commitments as regulators place greater attention on critical third-party dependencies. Story 3. B2B Payments and Infrastructure FinTech. Regulatory momentum pushes fintech closer to core banking systems. The wall between banks and fintechs is starting to disappear. One of the most closely watched developments in financial infrastructure is the continuing effort to deepen integration between fintech innovators and traditional financial institutions. Policymakers and industry participants are increasingly exploring ways to reduce friction that can prevent newer financial technology firms from participating more directly in regulated financial ecosystems. For e-commerce businesses, this trend could accelerate improvements in merchant settlement speeds, embedded finance services, supplier payment automation, and cross-border transaction efficiency. Payment innovation remains central because online commerce increasingly depends on invisible, machine-to-machine financial workflows that consumers rarely notice, but businesses rely upon every day. Market participants also continue discussing the future role of digital assets, settlement infrastructure modernization, and expanded access to core payment systems. The long-term vision promoted by many technology advocates is a financial architecture that moves information and value with nearly equal speed. Nortonros Fulbright. +1. Legal subtopic. Financial institutions and fintech operators are closely monitoring licensing standards, regulatory permissions, consumer protection frameworks, contract structures, and compliance obligations related to emerging payment technologies and digital value networks. Story 4. RegTech, Regulatory Technology. Compliance software enters the AI era. The compliance officer of 2030 may supervise algorithms more than spreadsheets. Regulatory technology continues attracting attention as organizations face increasingly complex reporting, monitoring, and governance requirements. Across financial services, regulators are devoting attention to AI governance, digital assets, operational resilience, and oversight of expanding technology ecosystems. E-commerce businesses are likewise managing growing volumes of transactional data, identity information, payment records, and cross-border regulatory obligations. AI-assisted compliance platforms are being positioned as tools capable of reducing manual review workloads while accelerating monitoring and reporting functions. Industry analysts increasingly see RegTech as a productivity multiplier capable of helping organizations scale without proportionally increasing compliance headcount. The strongest solutions emphasize explainability, traceability, and governance in order to align technology-driven decisions with regulatory expectations. As digital commerce expands globally, scalable compliance architecture is rapidly becoming a strategic differentiator. Citrin Cooperman. Legal subtopic. Legal leaders are paying increasing attention to AI governance policies, evidence preservation requirements, explainability standards, documentation procedures, and defensible audit trails for automated compliance systems. Story 5. Institutional trading and market infrastructure. Treasury market modernization accelerates structural change, the quiet market overhaul that could redefine global liquidity. Institutional market infrastructure remains a critical backbone supporting everything from pension funds and banks to payment networks and major e-commerce ecosystems. A major discussion throughout the industry centers on expanded clearing requirements in U.S. Treasury markets and the operational changes needed to support them. Market participants are evaluating the implications for liquidity management, margin requirements, post-trade processing, and risk governance frameworks. Although much of this work occurs behind the scenes, improvements to resilience and transparency inside core financial markets can have indirect benefits throughout the broader economy. Industry leaders increasingly characterize these changes as operating model transformations rather than simple compliance exercises. Enhanced infrastructure, greater efficiency, and stronger risk controls remain recurring themes. Long-term, supporters argue such modernization initiatives could strengthen confidence in the foundations supporting global capital flows. DTCC. Legal subtopic. Law firms, market participants, and compliance groups continue monitoring clearing rule implementation, contractual revisions, collateral arrangements, governance frameworks, and obligations associated with evolving market structure requirements. YouTube video description. Tomorrow's Finance and FinTech Deep Dive explores the 5 biggest developments shaping digital commerce, corporate treasury, enterprise risk management, B2B payments, regulatory technology, and institutional market infrastructure. We examine how AI-powered treasury systems, FinTech regulatory developments, compliance automation, operational resilience, and market modernization are influencing the future of e-commerce. The report maintains a forward-looking perspective grounded in current industry developments while highlighting the human impact of financial innovation and the possibility of future globally connected economic systems. Disclaimer: news commentary and analysis only. Not legal, financial, medical, investment, tax, compliance, or official advice.
Geotax.
Corporate treasury, treasury management, cash flow management, enterprise risk management, ERM, fintech news, B2B payments, payment infrastructure, embedded finance, digital payments, RegTech, compliance technology, AI compliance, e-commerce news, Treasury technology, banking innovation, financial infrastructure, digital assets, institutional trading, market structure, treasury markets, financial technology, fintech trends 2026, AI treasury, liquidity management, financial regulation, cross-border payments, risk governance, future of finance, economic